This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. It is Wednesday, June 12th. This is Not Your Advisor with NYU Grad. Let's jump right into Fed Decision Day. In Powell we trust. For the session, looking at breadth, we had 998 new highs and 139 new lows. Looking at advanced decliners, we had 70% advancing versus 26% declining. 42% of stocks were below its 50-day moving average, and 35% of stocks were below its 200-day moving average. Now, taking a look at some of the things that I wanted to highlight, as you probably have heard, the Federal Reserve decided to hold rates, make no changes today, and they said that there would be only one rate cut coming this year, and I believe that they're just going to keep kicking the can, and eventually, when September comes and they don't cut, and then eventually they're going to just keep waiting and say, oh, we have new data, we're data dependent, and they're just going to keep kicking this can. It's been 18 months so far of jawboning. First, it was we got to raise rates. Then we had the whole 6 to 8 rate cut dot plot fiasco, where every week it seemed we were talking about 6 to 8 cuts in 2024. Then we had the Santa Claus rally, and everyone's just expecting rate cuts, right? Everyone's just talking about it, expecting it, and we haven't really gotten any. This morning at 9:07, before the market opened, I had sent out a private chat to paying subscribers, quoting myself, I suspect if Powell is not dovish enough on rate cuts, this could be unwound in the last hour. And it's really perverse how the only narrative is fake inflation data and rate expectations. And then during the right before he got on the podium to speak, there was a quote. It said, the Fed Chair Powell said he does not have a definitive answer as to why on earth people are not happy with the economy. We have an economy growing at a solid pace. This man is beyond wealthy. He probably never has to even drive himself anywhere. And this is the type of BS that is happening right now. So I'll post a intraday chart, a 5-minute chart of the S&P futures contract. It's noted with the CPI as a white line, the Powell start time for his speech, and the end time in red. Look at the volume in the morning. Obviously, it was before the market opened at 8:30, but when the CPI data came out, look at the volume then, and look at the volume like around the 9:30 mark versus the end of the day, where we kind of started to sell off on the hopium, and we closed lower than the Powell decision speech and the 2 o'clock press release. So that's of note. I had said months ago, I suspect every positive news flow is going to be used by all of the powers that be to sell their stocks to the Main Street investors. And I still believe that that's what's happening, because on up days we have low volume, on down days we have heavy volume. The macro long-term breadth trends are still very negative. And it's all just very thin with the Magnificent Seven and the semiconductors. We continue to get stock split news. The latest one is Broadcom on their earnings call after hours. We have Chipotle Mexican Grill that will be splitting 50 for 1. And just expect many, many more stock split announcements. This is what happens at the end of bull markets. When they can no longer innovate, they do stock splits. They increase buybacks or announce buybacks. They increase dividends or announce a brand new dividend. And they announce layoffs. This is the CEO playbook to ramp your stock. Let's keep going. Let's keep peeling the onion. As I noted, the 300 Dow pop from the opening was sold off. We still closed positive on the NASDAQ and S&P, but not the case on the Dow. Taking a look at the Broadcom chart, I mean, it went from 1500 to 1640 plus in the aftermarket. So I have a very strong list here. And keep in mind, some of these names are like Russell 2000, smaller names here, but I'll go through them. So these are all percents. You have Zillow Group up 12.75% in the hopium that interest rates will come down. ARM Holdings 8.11%, Hims and Hers 7.44%, ACMR 7.3%, Reddit 7.1%, Bitfarm 7%, Carvana 6.6%, Lyft 6.3%, Affirm Holdings 5.77%. I'm glad I got out of the short. Zeta Global 5.3%, Uber 5.1%, Coinbase 4.4%, DJT 4.1%, Hovanian Home Builder 4.1%, Ferrari 4%, Pulte Home Builder 3.9%, Tesla 3.8%, Lamb Research 3.7%, Uranium 3.7%, Datadog 3.6%, Toll Brothers Home Builder 3.5%, Nvidia 3.5%, XHB Home Builder Index 3.5%, Ally Financial 3.5%, TriPoint Homes 3.3%, Qualcomm 3.2%, ITB Home Building Index 3.2%, Beazer Homes 3.23%, Yex 3.1%, ASML Holdings 3.1%, MicroStrategy 3.1%, DR Horton Home Builders 2.99%, SMH 2.98%, SOX Semiconductor 2.9%, Apple 2.86%, Delta 2.7%, KB Home Builder 2.6%, Shopify 2.59%, Cura Sushi 2.59%, Copang 2.58%, Restoration Hardware 2.49%, KRE Regional Banks bouncing today 2.48%, MongoDB 2.4%, Marathon Digital 2.42%, Wayfair 2.39%, Red Rock Resorts bouncing 2.3%, and Broadcom 2.36%. That's before the close and their earnings. They were only up 2.3%, but they were still up. What was weak? Zoom Communications down 3.7%, Etsy 3.3%, Roku 3.1%, Natural Gas Futures 2.79%. The 10-year Treasury yield down 2.48 to 4.29%. DRV 2.34, PayPal 2.07. For free members, continue to watch yields, Mag 7, semiconductors, as well as layoffs. Layoffs are picking up, so that's something to definitely watch. Paying members, please stay on. We're going to go over about 20 charts today. That's my train.
Stand clear of the closing doors, please.